Yes, sir. Sir, as you all know that we are doing computation of GST payable, which is the first 14-mark question for examination, mandatory question for examination. In that, actually, we have solved nearly 8 questions of past examination. When we come to illustration number 9, which has been asked in November 2019, there were one adjustment. Adjustment number 9. He has been assigned the right to collect royalty on behalf of Maharashtra government as excess royalty collection contractor. He noticed that mining leaseholder have short paid rupees 2 lakh as IGST from what had been exempted to him under the assignment. So this is some adjustment which we should have a perfect background about ERCC, excess royalty collection contractor. Actually, without this background or prerequisite, you will not be able to answer this question. So I have already made one prerequisite, which is about cost petroleum. That is video number 1. Now I am doing video number 2 for ERCC. I will explain you what this ERCC, how this is working, and I will come to what is the exemption and what is the consequences, my dear lovable students. There are two characters are there in circumstance or the situation number 1, scene number 1. There are two characters are there. Number 1 is state government and number 2 is the mining leaseholder. Actually, there is a place or area where you can mine. This place is owned by state government. The state government is giving that mining rights to that mining leaseholder, for example, ANM Limited. Sir, this is a supply of service because we all know that what is the definition of supply of goods? Goods means anything, sir, which are of movable nature. Anything other than goods or services. So, providing mining rights by the state government to the mining leaseholder is a supply of services. So, being a business entity located in taxable territory, ANM Limited received supply of services from state government. They are liable to pay tax at RCM. At RCM. For this mining leaseholder is liable to pay consideration to the state government. So what is the service number 1? State government has provided a service which is, sir, mining right sharing service to a company. For this, the company who are situated in taxable territory is liable to pay tax on reverse charge basis. For this, they have to pay consideration. 2 consideration has to be paid. One is fixed sum and additional sum. Sir, for this type of transaction, that fixed sum are technically called as dead rent, like sunk cost, like dead rent. Irrespective of the quantity mined, this dead rent needs to be paid by the recipient, that is ANM Limited. Sir, whether you dig, whether you mine 5,000 or 10,000 or 1 lakh or 20 lakh, sir, up to the level fixed by the government, you are mandatorily liable to be paid the dead rent. But, sir, the government is feeling that 10 lakh units you will mine. This is the minimum. But if you are mining more than 10 lakh, for example, 12 lakh units, if you are mining, for that extra 2 lakh unit, you are supposed to pay an additional amount called as additional royalty or excess royalty. Additional royalty or excess royalty. Assume the dead rent has been paid for 10 lakh unit, but actually you have mined 12 lakh unit. So extra units you have mined is 2 lakh unit. That for that extra unit mined, as per the terms of the contract, the recipient is liable to, sir, pay extra royalty called as excess royalty. Called as excess royalty. So my dear lovable students, I will give you a situation. Sir, state government is there. They have given the mining rights to ANM Limited for a units of 10 lakh. Assume that actually ANM Limited has mined 9 lakh unit. Then they are liable to, entitled to pay only the dead rent They are not entitled to pay excess royalty. So assume that they have taken that for 100 crores. For this 100 crore, A&M Limited is liable to pay tax at RCM. Fantastic to the core. But if they actually mine, sir, 12 lakh units instead of 10 lakh unit, for that 10 lakh unit, already they have paid dead rent. For this extra units of 2 lakh, sir, some amount of royalty they have to pay. That is called as excess royalty. On that excess royalty, sir, GST has to be paid. So for this 100 crore, which is the dead rent, the recipient A&M Limited will pay tax on RCM. And also for the extra 2 lakh unit, whatever royalty coming, for that royalty also A&M Limited will pay RCM, sir, GST on an RCM basis. Fantastic to the core. So what is the transaction happening here? State government is giving the right to a company for the purpose of mining, called as mining leaseholder. And state government is saying that you can mine up to 10 lakh unit. If you are mining over and above the 10 lakh unit, for that extra unit, you are supposed to pay as extra royalty plus GST. But you tell me, practically will the A&M Limited or the mining leaseholder will disclose the real number? Because when they disclose the real number, if they really mined 12 lakhs or 13 lakhs or 15 lakhs, for that extra amount, they are supposed to pay extra royalty to the government along with the GST on reverse charge basis. So generally, every company will try to hide that, the actual amount of mining. But government has to keep on watching that company, how much they are mining. So to escape from that situation, what government will do, government will enter into a deal with some other company. For example, the state government will enter a contract with ERCC, Excess Royalty Collection Contractor. So the state government will assign the right to collect that excess royalty. Actually, that right is with the state government. State government is having the right to collect that excess royalty over and above 10 lakh unit. But that right has been granted by the state government to the ERCC. Even this is also a supply of services from state government. What, sir, state government is saying that to get this right, this ERCC has to pay some consideration. Assume 5 crore has to be paid. So ERCC should pay consideration. Actually, the service provider is state government and service recipient is ERCC. Sir, if this ERCC situated in taxable territory, then ERCC should pay tax at RCM. Should pay tax at RCM. Sir, what state government is saying that ERCC, you pay as in advance 5 crore. You take that right. We are happy. Why we are happy? Because, sir, we got 100 crores as the dead rent from the actual miner. And we are getting additionally 5 crore from the ERCC and we gave the right. Fine, fantastic to the core. Now ERCC is asking to the state government that this is a good land. Sir, I am expecting bumper mining. I think that 8 crore will be the excess royalty. So today I am paying you 5 crore. Sir, in future, I will be collecting 8 crore from the, sir, mine leaseholder. So I will be getting a profit of 3 crore. But I have to pay you 5 crore now and I have to pay GST on that 5 crore as RCM. GST on that 5 crore as RCM. It is an additional burden for me. So government said that, sir, that GST on 5 crore is exempted. That GST on 5 crore is exempted. Now you read this. Service supplied by state government. So the service provider is state government. To excess royalty collection contractor, which is ERCC, excess royalty collection contractor. By way of assigning the right to collect royalty. Actually, who were having the right? The state government were having the right. That right has been given by the state government to ERCC. For that, ERCC has to pay some consideration, which is how much crore? 5 crore. On behalf of the state government. On the mineral dispatched by mining leaseholder are exempt from GST. Fantastic to the core. Now, the ERCC is very happy. ERCC has to pay 5 crore rupees consideration, get the right. He will start counting how much ton or how much unit is mined by the actual miner. If it crosses 10 lakh unit, now he's entitled to pay, sir, excess royalty. So on this 5 crore, GST is exempted. Now ERCC is very happy. But the state government is saying one additional condition. At the end of the mining period, for example, it may be for 1 year or 2 year or 3 year or 4 year or 5 year. Assume that the life of the mining period is how many years? 5 years. At the end of the 5th year, ERCC, you have to come forward and you are supposed to furnish a statement to the state government. Sir, the royalty paid by the ERCC is 5 crore. If the excess royalty collected is only 3 crore, that means, sir, when the actual mining happen, if it goes more than 10 lakh unit, then the leaseholder, this mining leaseholder is liable to pay excess royalty. What he will do, for example, if he has actually, the actual output is 15 lakh unit, assume. So extra how many unit he has mined? 5 lakh. On this 5 lakh unit is liable to pay what royalty? Excess royalty. So for this excess royalty will be handed over to the ERCC because central government has given that right from their pocket to the ERCC, and ERCC has paid some 5 crore rupees as consideration. So now central government does not have the right to collect what? Excess royalty. That excess ERCC will collect that amount. And for this excess royalty, GST will come. Because for the mining leaseholder, for him there is no transaction with the ERCC. Actually, state government and ERCC only having transaction. But the state government informed the mining leaseholder that if there is any excess royalty, instead of depositing with the government, please deposit that amount with the ERCC. But even on that excess royalty, GST is leviable. That GST, you itself has to pay at RCM. That you don't give to the ERCC. So that excess royalty hand over to the ERCC, and GST on the excess royalty has to be paid by that mining leaseholder to the government. So now, at the end of the period, there are only 2 circumstances arises. ERCC has to file a statement to the government that, sir, assume that excess royalty collected is only 3 crore. Oh my God. That means ERCC has not studied that land or plot or site very well. Actually, for him, it's a business loss. Because he has paid 5 crore to get that right. But he was able to collect only 3 crore excess royalty from the mine holder. So, for this 3 crore, only the government would have got the GST. Because who would have paid GST for this 3 crore? The actual mine person, this guy would have paid, mining leaseholder would have paid GST for the 3 crore to the government. But government allowed exemption for 5 crore. Now government is asking that, why we have to provide you the exemption? We provided you the exemption with an assumption that we will be getting GST more than this 5 crore. Whether it's a profit or loss for you, it's your headache. That is not our consideration. So, if the amount collected by the ERCC is only 3 crore, the GST exempted on 5 crore. But the government got the GST only on 3 crore because only that amount is excess royalty. On that 3 crore would have been paid by the mining leaseholder to the ERCC. And for that 3 crore, that mining leaseholder would have paid GST to the government. So there is a shortfall of 2 crore. Now, sir, ERCC has enjoyed extra exemption to the extent of 2 crore. Sir, GST on 2 crore, ERCC should compensate now. Sir, scenario number 2, positive scenario. ERCC got the right by getting 5 crore rupees, but ERCC collected 8 crore. Wow. That means it's a bumper mining. That means, sir, this guy, that is mining leaseholder, would have paid 8 crore to the ERCC. As per the contract, is supposed to pay, sir, extra royalty. And on that 8 crores, he would have paid GST at RCM. Government is happy. ERCC is happy because government got GST on 8 crore. So government collected GST on 8 crore, but they provided exemption to the ERCC only to the tune of 5 crore. There is no shortfall 3 crore. Then no additional liability for ERCC. So I'm reading this once again. Sir, services supplied by a state government to ERCC. So service provider is state government and service recipient is ERCC. What service they provided? Assignment of right to collect royalty on behalf of the state government on the mineral dispatched by mining leaseholders are exempt from GST. Sir, with two conditions, sir. There are two conditions are there. Condition number one, at the end of the contract period, it may be 1 year, 2 year, 3 year or 5 year, ERCC shall submit an account to the state government. ERCC should furnish a statement to the state government and certify that the amount of GST deposited by the mining leaseholder on royalty is more than the GST exempted on services provided by state government to the ERCC of assignment to right to collect royalty. For example, sir, second example, ERCC has paid really 5 crore. Actually, for this 5 crore, ERCC is liable to pay tax at RCM, but that is exempted as per the above mentioned notification. ERCC should prove to the state government that actually I got 8 crore, so there is a profit of 3 crore. You got GST on 8 crore. Then the GST collected is more, the exemption is less. Hence, I don't have any extra liability. This is situation number 2. But where such amount of GST paid by mining leaseholder is less than the amount of GST exempted. GST exempted on 5 crore, but the mining leaseholder paid GST only on 2 crore. There is a short of, 3 crore. There is a short of 2 crore. Exemption shall be restricted to such amount as is equal to the amount of GST paid by the mining leaseholder. Mining leaseholder have paid only GST to the tune of 3 crore. But exemption already enjoyed is 5 crore. That 5 crore will be restricted in future. That means there is a short of 2 crore and the ERCC shall pay the difference between GST exempted on the service provided by state government, which is GST exempted will be, for example, 5 crore into 18%, some amount you will be getting, to the ERCC of assignment of right to collect royalty, and GST paid by the mining leaseholder on royalty, which will be 3 crore into 18%. Only to this extent exemption will be available. The differential GST should be paid by the ERCC at the end of the contract period. At the end of the contract period. Sir, who is mining leaseholder, sir? Mining leaseholder means a person who has been granted mining lease, quarry lease, or license or other mineral concession under the Mines and Minerals Development and Regulation 1957. And rules made thereunder, or the rules made by state government under 15 subsection 1 of the Mines and Minerals Development and Regulation Act. What a concept this is. Now you read this adjustment. He has been assigned. That means ERCC has been assigned right to collect royalty on behalf of Maharashtra government, state government, as excess royalty collection contractor. Fine. For that, this ERCC is entitled or liable to pay some consideration. My dear lovable students, that is exempt from GST with the futuristic condition. ERCC in future should submit a statement to the central government and prove to the, state government and prove to the state government that the GST collected is more than the GST exempted. Then there is no liability. But the GST exemption is more, then the differential amount ERCC is liable to pay tax. He noticed that mining leaseholder has short paid 2 lakh as IGST from what had been exempted to him under the assignment. So there is a short paid of 2 lakh IGST. Now this 2 lakh IGST should be added to the output tax liability of this ERCC, because whatever difference is there, my dear lovable students, has to be, sir, paid by the ERCC. So assignment of right to collect royalty 2 lakh should be added to the output tax liability. Sir, this is the inward supply under RCM. First, he has to pay under RCM. Assignment by state government of the right to collect royalty from mining leaseholder to the extent the exemption is not available. Now, for the shortfall, 2 lakh rupees GST should be paid by the ERCC from his pocket on RCM. Since he is paying from his pocket on RCM, he can take that as ITC. That's why in total computation table also that 2 lakh has been added. So one line summary of the entire discussion is, sir, the state government will enter into 2 contracts. Basically, one with, sir, MLH, that is mining leaseholder. For that, he has to pay 2 consideration actually. One is fixed sum dead rent. For that, he himself will pay the GST on RCM. And whenever he crosses a threshold limit, like they'll be keeping as per the contract, if you are digging till that 10 lakh units, we don't have any problem. But if you are digging more than 10 lakh units, you are supposed to pay as excess royalty. On that excess royalty also, you are supposed to pay GST on RCM. Sir, on both the MLH only will pay tax at RCM. But the government always has to see like this when they are, sir, their threshold limit is, sir, extending. My dear lovable students, it is impracticable for the state government and also for the MLH. They won't show proper accounts. So, for that purpose, the state government is entering a contract with some other person called as ERCC. To that ERCC, state government is saying that actually we have the right to collect the excess royalty, but if you are paying upfront amount, you can take that right. For that, ERCC is paying 5 crore rupees. And ERCC is asking that now 5 crore rupees I have paid to you. Sir, you got already dead rent and 5 crore. Now I have to pay GST at 18% at RCM, means my working capital will get affected. So state government said that no problem. Sir, this service is exempted from GST. You start collecting the excess royalty from the MLC. Fantastic to the core. If the additional extra royalty collected by you is more than the, sir, amount what you have get, then no issue at all, my dear lovable students. But if that amount is less, we will get only less royalty. You will get only less royalty. On that less royalty, we will get only less GST. Then you will claim more exemption. That we will not allow. So in future, you have to come and prove to us that the GST collected by the government is more and exemption is less. If the exemption is more than the GST collected, for that differential amount, you have to compensate us in future based on that futuristic condition. Only on that 5 crore, we are giving exemption. What a beautiful exemption, my dear lovable students. Many of the students feel this as very technical. I hope that you have a fantastic and wonderful understanding with regard to ERCC now. If that is the case, inform me in the comments, sir, how much you have enjoyed this topic. Sir, 2 background has been added. One is cost petroleum and profit petroleum. And number 2 as prerequisite, which is ERCC. Sir, after this prerequisite, I will be solving this illustration without the prerequisites or background, my dear lovable students. If you are enjoying and if this is an additional information, inform me by way of comments. We'll meet you with a new video, with a new concept. Till that, thank you and bye-bye from me.